During the next hour or so, we will learn about the importance of the compliance function within investment firms and banking institutions. We will also examine the compliance function and its relationship to ethics. Compliance is following the law, while ethics is doing what is right regardless of what the law says. The compliance officer has a duty to his employer to work with management and staff to identify and manage regulatory risk. The overriding objectives of a compliance officer should be to ensure that an organisation has internal control systems that adequately measure and manage the risks it faces. The general responsibility of the compliance officer is to provide an in-house compliance service that effectively supports business areas in their duty to comply with relevant laws and regulations and internal procedures. Due to the increasing number of regulations and a need for greater operational transparency, organisations are increasingly adopting the use of consolidated and harmonised sets of compliance controls. This approach is used to ensure that all necessary governance requirements are met, without an unnecessary duplication of effort and activity. Having said this, we will examine the compliance function in 5 sessions. In the first session, we will examine the compliance function in general, taking a closer look at the following items: the role of the compliance officer and his place within the internal control framework, the role, responsibilities and mission of the compliance function and the compliance officer's profile, areas covered by the compliance unit, the relationship between the compliance officer and the compliance unit and other roles and units in a regulated company, and practical tools and methodologies that facilitate the compliance officer's daily work. In the second and third sessions, we will examine the compliance function within investment firms. Investment firms should establish, implement, and maintain adequate policies and procedures designed to detect any risk of failure by the investment firm to comply with its obligations under the respective law. As part of this, the compliance function should identify the level of compliance risk the investment firm faces, taking into account the investment and ancillary services and activities provided by the investment firm, as well as the types of financial instruments traded and distributed. As part of their responsibility to ensure that the investment firm complies with its obligations under the law, individuals who effectively direct an investment firm must ensure that the compliance function fulfills its requirements, taking into account the nature, scale, and complexity of their respective business, and the nature and range of investment services and activities undertaken in the course of their business. In the fourth session, we will examine the compliance function within banking institutions. A typical compliance program within a bank includes senior management oversight via the organisation of pertinent committees, meeting agendas, and meeting minutes. There are significant differences in legislative and regulatory frameworks across countries with regards to the functions of the boards of directors and senior management. In some countries, the board has a main, if not exclusive, function of supervising the executive body, senior management, general management, to ensure that the latter fulfills its tasks. For this reason, in some cases, it is known as a supervisory board, which means that the board has no executive functions. By contrast, in other countries, the board has a broader competence in that it lays down the general framework for the management of the bank.